BOI for my self-directed IRA. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of Adam Talks. Today's podcast, I am going to discuss the beneficial ownership interest and the Corporate Transparency Act rules. And do you need to file the BOI for a self-directed IRA, a Checkbook Control LLC, or a solo 401k, or even a ROBS, a rollover business startup solution? So I want to do this. I've done a bunch of content on the subject, but we're getting into fall and all this has to be done before 12/31/2024. So before January 1, 2025, whoever has an entity, and I'm going to go through some of the requirements, including, as you'll see, an IRA LLC, a checkbook control, a rollover business startup, or if you have a solo 401k that owns an entity, an LLC or corp, that entity, even if it's owned by a tax exempt, will still need to file a BOI, okay? And the BOI is, I think, greatly misunderstood. And I want to go through this PowerPoint presentation I put together, which I've shared in the past, to explain what the BOI is, what the Corporate Transparency Act is, and really the requirements, because this applies to any entity, and we'll go through some of the exceptions in a minute, that would have to comply and file the BOI with FinCEN by January 1st, 2025, and failure to do so could lead up to jail, 2 years in jail, $10,000 fine. So this is a very, very serious rule that needs to be understood. There's millions and millions of Americans that will be affected. Going forward, obviously, if you set up a new entity starting in 24, you would have 90 days to file the BOI for the new entity, but the rules for previous entities that were formed before 2024 have until January 1, 2025 or 12/31/24 to file this beneficial ownership interest with FinCEN. So as I mentioned, this is part of the Corporate Transparency Act. It's part of FinCEN. This actually came into being in part of the Anti-Money Laundering Act of 2020. The intent of these rules, according to the government, and we'll see about the constitutionality, because there is a Alabama state court case that actually ruled it unconstitutional. So you may be thinking, hey, do I actually need to do this if a state court ruled it unconstitutional? There's a lot of pro-business groups, lobbyists that are fighting this rule. But as of today, you need to still file the BOI unless you're part of this very specific group in Alabama that won their case. But otherwise, for everyone else, you still need to file it unless the Supreme Court rules on it. And if they do, obviously, I will make sure to broadcast that through our social feed, YouTube, podcast network, essentially that. So you will know about it, don't worry. So I talked about the constitutionality. The government's position is, hey, the only way we're going to be able to combat anti-money laundering and fight criminals and bad people is if we get more info about the entities, because these entities are money laundering, and this is how the terrorists and these bad people, drug dealers, are able to operate, is through using U.S. entities that are somewhat hidden from the government in terms of who owns them, who's receiving the distributions, who's making the decisions. And they feel if they get a better handle on that and get more details, then they are going to be able to combat these folks more cleverly. I'm not sure about that because, again, we'll see through the exceptions. If you're going to money launder, you're going to do it through profitable businesses. You don't money launder on a company that has $1,000 in income. You money launder it on a company with 20, 15 million in revenue. There's ways around it through trusts and other tax exempts, which a lot of foreign terrorism is done through U.S. tax exempts, which would not be part of the BOI and complying with the Corporate Transparency Act. So this case, National Small Business versus Yellen, it was a March 2024 case. And basically the court ruled that this was an overreach by the government, and it will likely go to the Supreme Court at some point. Probably has to go this year because we're all going to need to know what to do. But the court really felt that the government overreached, they overstepped their responsibilities. This is not part of their constitutional mandate, and they don't have the power to do this. The DOJ, Department of Justice, appealed it, and we'll see how that goes. So based off the Corporate Transparency Act, this is the requirements. One, you got to report beneficial ownership information, beneficial BOI, to FinCEN. And FinCEN is the United States Department of Treasury Financial Crimes Enforcement Network. And two, you got to disclose information about who created the entity or registered it. And then you have to report if there are any changes. Okay, so the BOI, you have to show who actually owns it or has some controlling feature of the business, manager, executive, and then who formed the entity. The forming, it's weird, right? Like, who cares what lawyer or accountant formed the entity? Why does the government need to know that? That I don't understand. I think that's a tremendous overreach, and I don't think that adds a lot of value. So again, anyone that's formed after January 1, 2024 is going to have 90 days. I'm going to focus this podcast on the entities that are formed prior to January 1, 2024. And any domestic reporting company, okay, that was established before January 1, 2024, that doesn't satisfy an exception, which I'll get into in a minute, has to file the BOI before January 1, 2025. There are two types of domestic reporting companies. The first is someone who's filed a document to the Secretary of State, right? A U.S. entity, a Florida entity, Texas, a domestic reporting company, unless it's a foreign reporting company. So a company that is formed in a foreign jurisdiction, but if it registers to do business in the U.S., then it also is deemed a U.S. reporting company. And here are the exemptions, right? Tax exempts, trusts, like nonprofits, okay? Entities that don't file with the Secretary of State, such as a trust, and large operating companies. And this is a company with 20 or more full-time employees and 5 million in gross receipts. It's not or, it's 20 employees full-time and 5 million in gross receipts. So, right, like Apple doesn't have to file this, right? But if you have a passive company, it doesn't even have to be an active business. In fact, if you have a company you set up like 3 years ago, 10 years ago, just lying around, you haven't dissolved with the Secretary of State, it has no bank account, nothing going on, but you're an owner and you are a controlling party of that entity, you still need to file the BOI. So what I would suggest in that case is dissolve the entity, dissolve it. But if it's still active and it's with the Secretary of State, even if it's no bank account, there's technically a filing responsibility. Okay, so once you have an entity that's reportable, the next question, who's the beneficial owner, right? What do you actually have to report, right? The first question is, okay, is it a domestic company that's reportable, not subject to an exception, like we'll see an IRA, a charity, trust, a large operating company, 20 full-time employees, 5 million gross receipts. Now that you know you're a reportable company, what do you have to report? So someone who has substantial control, someone who controls the entity, which is 25% or more ownership, okay? So you have substantial control, meaning you are CEO, the CFO, a manager, president. We'll get to some of the requirements, or you have 25% or more ownership. It's not an and, it's or. So you technically may have to disclose multiple folks, right? You may have to disclose your CEO, your CFO, your head of, I don't know, operations, potentially, your president, your board members, and your 25% or more members, okay? So beneficial owner is someone who has substantial control, could be a senior officer. It's very, very broad. And this is going to get some people in trouble because people are going to understand what 25% or more is. That's easy to understand. It's the substantial control threshold, that prong, is very difficult, right? Is it who has substantial control, right? A senior officer, is someone going to think they're general counsel, right? Who exercises substantial control over an entity or controls directly or indirectly the company. It's kind of broad, objective. I mean, general counsel, we get president, the marketing officer, HR, board of directors. Like board of directors have decisions, but are they executing substantial control? What happens if they don't have votes over material decisions of the company? So this is the stuff that is confusing. And I think the answer is just over-report instead of under-report, because it's a confusing threshold. The 25% we get. When it comes to options, warrants, you treat them as exercise. So if you have a situation where you have 12% of the company, but potentially you can get warrants to give you 30%, you treat yourself as owning 25% or more. So what do you actually have to give the government, FinCEN? What the hell do you give them? Well, you have to give them your name, your birthday, your address, some form of ID. And you're going to have to then, whoever is filing the FinCEN, and this is something IRA Financial is doing, one of the few companies in the IRA space, which we'll get to in a minute. We are taking the responsibility for our customers that want us to do it for them for a small fee. We are taking the responsibility of filing this using our FinCEN number, so you don't even have to get a FinCEN number. And since we were the ones that filed your LLC, your Checkbook Control LLC, it makes sense for us to do it since we're the one that has to be reported anyways. We'll use our FinCEN. You don't have to do anything. You don't have to go on the FinCEN website. You don't have to get a FinCEN ID. We'll take care of it for you, and it's no big deal. And the beauty of this BOI is it's a one-time filing. As long as you don't make any amendments to your company, you don't change the address, change a manager or an owner, you don't have to do anything else. It's a one-time fee, one-time occurrence, not a big deal. Okay, so now for IRAs. If you just have a plain self-directed IRA, you do not need to file a BOI. But if you have a self-directed IRA LLC, Checkbook Control, you do need to file a BOI. Even though the IRA is the owner of the entity and it's tax exempt, you have to report the responsible person, all right, who has substantial control, which is you as the manager. So yes, the IRA is exempt, but here the LLC is a reporting company, and the LLC is not exempt. Even though it's owned by an IRA, you still have to report who has substantial control, which is the IRA owner, which is you, and that's something we would do. Self-directed IRA trusts do not have to file, since trusts are not filed with the Secretary of State. A solo 401k, no. Okay, that's good news because the 401k is tax exempt and there's no underlying reportable company. But if you have a solo 401k LLC, or you have a ROBS, a rollover business startup, where the corporation is owned by the 401k, that corporation is a reportable company. Unless it has more than 5 million of gross receipts and 20 full-time employees, it's going to have to report. But going back to the whole question of self-directed IRA, if you just have a self-directed IRA that owns a piece of real estate, you're fine. You're not going to have to report on it. But if you have a self-directed IRA that owns an LLC or owns a company, that company will be a reportable company, assuming it's domestic and it doesn't have 5 million in gross receipts and 20 full-time employees, or doesn't satisfy any other exemption. You may not be the person that has to file that for the LLC because you may not be the responsible party, but if the entity at question will still be required to file with FinCEN and file a BOI, it's just you may not be the responsible party. But if you have the IRA LLC and your IRA owns 100% of it, or a percentage of it, and you're the manager, then you have the responsibility to file, and we will do that for you. And since we form the LLC for you and we have a FinCEN number, it obviously makes sense that we just do it for you, and we can use our FinCEN number. You don't even have to use one for yourself, and we can take care of it. So that's the most important thing of today's podcast, is really this BOI applies to entities formed after January 1, 2024. You have 90 days to file the BOI unless you satisfy an exception. Before any entity before January 1, 2024, whether it was formed in 1960, 1970, 1980, 1990, 2022, 2023, if no exception is satisfied, you have to file the BOI by December 31, 2024. Penalties, $10,000 and up to 2 years in jail. Now, why are the IRS and Congress being so willful? Because they're seemingly trying to go after bad people, money launderers, terrorists, drug dealers, or criminals, and they feel that using these entities is a great way to go after them. I disagree. I think it's arbitrary because, again, if I was advising, which I'm not, I'm a good person. If I was advising criminals, I would tell them to use charities. It's the easiest way to have criminal enterprises. Church, don't file any returns. They don't even file a 990. Any church, I don't want to pick on churches, but synagogues or mosques or places of worship, they are the best places to fund terrorism because they don't file 990s. They are basically protected church versus state. So there's large layers of protection. You get tax deductible donations. And obviously the banking rules would allow oversight into foreign wires, but that would be the way I would money launder and I would do bad things. So the BOI wouldn't solve that because I wouldn't have to file anything for my charity. Other ways is I'm going to money launder. I'll do it with bigger companies that have more revenues. It's easier to launder money at a company that does 10 million in revenue versus $10, right? You can't wash money if there's only $10 of revenue. Trust. You don't set up an entity, you can set up a trust. It's not filed with the Secretary of State. It's technically not a reportable company. and you don't have to file the BOI. So I hope the Supreme Court overturns it. I'm not sure they will, but I think it's an overreach by the government. I don't think they're going to get much valuable information. I don't think it's particularly useful, to be honest, to gather this info. They can audit certain folks. They have the information. It's just not handed to them on a silver platter, but the information is available through audit, through tax returns, and they can find it. So the most important thing is, listen, if you do have an entity and there's no exception that is satisfied, even if it is a dormant company, even if the company has $1 in the bank account, or it's just a passive entity, it's just a investment vehicle, a partnership that you and your friends like just hold a piece of property, you still need to file a BOI. You're going to have to report anyone that has substantial control, plus anyone that has 25% or more ownership. So just be wary. And again, if you have an IRA LLC, a solo K with an LLC or a ROBS, just let us do it. It's a small fee. It's $250, but it's a one-time fee, right? And if you have trouble paying it for any reason, let us know. We don't want people not to file because they can't afford the fee. But we have to hire a bunch of people to do this because we have obviously 20,000 plus clients. So we don't want everyone just coming to us December 30th and saying, "Hey, can you file our BOI?" So we're starting to send emails, and texts are going to come, and it's just easier to take care of it. Again, the fee just literally covers the people we have to hire to do this. And we're taking all the responsibility since we have to use our FinCEN number and we're the ones filing on your behalf. So either way, whether we do it or someone else does it or you do it, make sure, whether it's an IRA LLC, any IRA owned by an entity, a 401k owned by that owns an entity, a rollover business startup corporation, or any for-profit company you own, right? As I mentioned, it could be a passive entity, it could be a for-profit business. If there's no exemption that applies, like the 5 million and 20 full-time employees, or it's not a charity or a trust, you're gonna have to file this thing and just get it out of the way, because we know what happens, right? School starts, get busy, work gets busier. You got Thanksgiving, then Christmas, and before you know it, it's December 30th, and you're like, "Oh my God, I have to do all this stuff and figure out how to do it," and it's stressful. So just knock it out. We'll do it for you. It's easy, and you're done. That's it for today's podcast. Hope you enjoyed it. Sorry to be so downbeat, but I do hope it gets overturned. The BOI is, I think, super aggressive on the part of the government. I don't think it's going to solve its intended interests of stopping bad people, terrorism. There's easier ways to get around it. It's just a information data grab by the government. And with AI, they can comb through all this stuff very easily. And I don't know what they're going to do with it, but the more governments love data, right? And the more data they have, they feel like they have more power. And that's not something I really appreciate. I don't think they need it. They want it. They can find it other ways by audit. That's their right. But to force us to give them all this info, and I think the Supreme Court case, the Yellen case, no, excuse me, not the Supreme Court, the Alabama State case, National Small Business v. Yellen, they won. So if you're part of the National Small Business Association, you don't have to file the BOI technically if you're part of that body of plaintiffs in that case. But everyone else, we have to, unless another court case comes to bear, including what I believe a Supreme Court case in the next few months. I haven't heard a date on when the Supreme Court would rule, but it's got to be soon, because if not, we're going to have to comply anyways. They can always rule after the fact, but what's that going to solve? Because we already divulged all the information to the government. So thanks again for listening. If you're watching on YouTube, really appreciate it. Thanks for all the support. If you have a question, comment, leave it. Don't forget to subscribe. You'll get notification when a new podcast drops. And this is obviously a weekly podcast. But I have other podcasts in the IRA Financial Podcast Network, including a great YouTube channel. We're starting to do some TikToks. We do some great stuff on Instagram. So trying to keep the videos shorter. I've been doing longer videos just because I can talk about this stuff forever. But feedback I'm getting, including from my kids, is, "Dad, keep it under 45 seconds. People are busy. They don't want to be bothered by you." So I'm listening. I'm trying. But if you guys have feedback or comments and you like that new format, or you want the old longer video format, let me know. Love to hear from everyone. Otherwise, have a great day, and I'll talk to everyone again next week.